So, in last week's episode of kind of building these crypto systems, I tried a different strategy and combined the two strategies together, and it didn't really work too well. And I kind of showed why, and I showed the difference there. And I just showed that essentially what we're trying to do is find things that complement each other very well. And sometimes it's a little bit harder than you would think, in which what we're trying to do is take not guess for a perfect strategy, but to take multiple imperfect strategies that work well together. So you have a mean reverting strategy, and that worked very well in kind of most markets, sideways markets, uptrending markets, had some kind of weakness here or there. So the second strategy I want to build, as opposed to, fine tuning that mean reversion strategy until it's amazing, the second strategy I want to build so that it works separately, so that it works well when the other strategy is failing, and vice versa. This is how we smooth out our equity curve as traders, as many uncorrelated strategies as we possibly can. So I failed last time. This time it's feeling a little bit better, so I thought I'd just turn on the camera and show you guys what the difference is, what I'm seeing now that I wasn't seeing before. Again, all of this will be part of StatsEdge Pro. For anyone who signs up before I complete the strategies and launch them, it will be all part of the package you have now. You'll be grandfathered in at the current rate. There may be an upcharge for crypto just because it's taking way more time than I thought and way more effort, data costs, that type of thing. So without further ado, we're just going to pop into it here. We're going to grab. So to remind ourselves, our mean reverting strategy. Our mean reverting strategy is this one right here. We'll go into this guy. This one right here. So we tested it and about at a 37% year over year gain, 34% max drawdown. Again, I'm still playing with these, so the numbers may change kind of week to week, and did pretty well, right? One losing year, pretty much okay for the rest. Nice uptrending graph, but nothing perfect. You can see a lot of pullbacks, a lot of drawdowns, a lot of periods of time where there's no equity improvement, there's no advance in your equity curve. Those are the things that we're trying to smooth out. Now, we could take this strategy and just hammer it to death, but that's not what I try to do. I try to take something that's okay, and then add additional strategies to it in order to kind of smooth those out. So what I did is looked at the core of that strategy, and it's mean reverting. So mean reverting meaning you're looking for something that's pulling back a little bit. You're looking for it to continue lower. You buy it there, and then a nice bounce and a push on from there. And we're out of that, I believe, in 2 weeks, because we realize that's about the best. We buy it, we put out a stop loss, we fast forward 2 weeks, we sell it, we move on. Now, with this strategy, what I wanted was kind of the opposite of that. Well, some crypto seems to trend higher sometimes. Bitcoin's hitting like a new multi-year low as we speak, but you have these periods in which trends can actually happen in the crypto space. So as opposed to just playing the bounces and just playing the mean reversion kind of scalping around, I wanted to take that and change it on its head. Last week, I did another period or RSI strategy that used a different idea with RSI. And again, the problem is we found those were too closely correlated. When one strategy lost money, so did the other, and vice versa. They weren't making up for each other's weakness. They were just kind of amplifying returns. And I'd rather just trade the better strategy, 2x size. So the point is to diversify across these. So what I came up with was just a completely different strategy. And this is a very simple moving average strategy. We're looking for stocks to break over a short-term moving average. I believe it's the 10. I won't hide any of this from you, but I won't give away all the secret sauce, of course. But we're looking for a short-term moving average to be above a long-term moving average, and then we're looking for the crypto to break above the long-term moving average. And then we hold it until it breaks back through the moving average. Again, very simple strategy. You want to buy on breaks moving averages. You want to hold until it closes below the moving average. Then you want to exit your trade and move on. And this is one in Hype USDT that I just saw as an example. You can see this one was downtrending for a little bit, but then reverted higher here. We bought it at $40 and then sold it a little bit later at 42. Again, a completely unrefined strategy, not something that I've put a whole lot of work into yet at all. And this is the equity curve. And the reason I wanted to show you to it now, instead of when it was more refined, was to show you my individual process behind it. So the red line is the new strategy. The green line is the old one that I just showed you. Then the gray shaded area is the two of those combined. Now, what we're looking for is we're just looking for this line to be smoother than both lines combined. You can see during this drawdown, both of these things drew down. That wasn't awesome. It's not what we want to see. However, for this blank period, we had a nice push up here. And then we can go look at the numbers. Again, I just want to refresh you for the numbers being of the original one, 37% year over year return, and then a 35% max drawdown. Now we're flipping that on the head, where this one has the same thing, a 30% year over year growth and a 35% max drawdown. But then when we combine the two, remember before we were seeing a massive increase in the return, we were also seeing an increase in the drawdown and just leveraging up. It was just leveraging up these two particular strategies. Now, what we're seeing instead of that is we are seeing an increase, a sizable increase in the amount of money that we're making at over double the year over year growth, and then a slight increase in the max drawdown. So what would happen is I'd probably trade these two smaller to bring that drawdown more in line with what I'm comfortable with. But you're seeing an asymmetric increase in the money, the profit, and a not as great increase in the risk. And that's mainly what we're looking for from adding strategies. That's like the simplest way to do it. Now, real test, which is what I'm using here, gives us some better ways to look at it as well. Again, so this is the equity return. You can see it had that one bad year. Again, very unrefined, not playing with this. This is not something I would trade currently. However, you're seeing now these drawdown numbers change. So this is the returns. So this is the mean reversion weekly and the trend. And again, just stats 101 again. A 1 here would mean a perfect correlation between these two strategies. It would mean that the trend right here is very closely linked to the mean reversion. But you can see only a 0.17. That's much, much better than it was before. Ideally, you're looking for like a 0 or a -1 and just completely 0 at the very least. Very uncorrelated return. It doesn't matter what system A is doing at all because system B is doing its own thing and they're not at all related. However, in the crypto space, when everything is going to be moving together, this low of a correlation is something that's interesting to me. And then same with the drawdown, a 0.37, a little bit better than before, but again, you're seeing these return correlations really shrink. And then just looking at the equity curve, it looks like it's smoothing out a bit. So this is the process for me, is I take my finished-ish strategy, and then I just throw in a new idea. Just here's a new idea. It's brand new. It has nothing to do with anything else that we were doing. Brand new idea. Here you go. And watch those correlations. And if it's uncorrelated enough, it is proven to me now that it is worth my time. So now I'm going to dive into this trend following strategy, optimize some moving averages, try to figure out if there's something else that really overall affects the strategy. Because if I can make that other equity curve start to look as good and start to trade as well as the first equity curve, I am hoping that while I do this, I see this correlation start to diverge as well. So I won't just be looking for the overall return metrics of this particular strategy to get better, but that correlation to start shrinking as well, where the last one we looked at, it looked totally similar. So there was no point of me really working on it. Now, here I'm onto something. So in the next week's episode, we're going to see what refinements I ended up doing and how and if, because there's a world in which it doesn't, how and if that helps with our correlation. And then if that looks good, now we have two strategies that we can potentially trade that are completely kind of separate from each other. And that will get to the point where I think we're going to start beta testing before adding additional strategies. So that will come in trading somewhat this strategy in some sort of a paper trading mode, or even just seeing the alerts after the fact and then going in and examining the charts and seeing if the fill was possible and what kind of slippage we would have got, things like that. That's all stuff that comes after we get two strategies that we're very interested in looking at. So again, if you're interested in this kind of trading, follow me wherever it is. If you're interested in me doing all this work for you and you just getting the end result of that, well, that's what StatsEdge Pro is. I do all of this work because I like it and because this is the way I prefer to trade, as opposed to trying to pick what stock looks like it's going to go up next. Then from there, the output of all of my work gets shared with StatsEdge Pro members. And you can find that for all the different strategies we run for one low price over at statsedgetrading.com. And until I talk to you guys next time, get away from the screens.